Okay, quick question. In 2024, you could earn a sweet 28% return just by investing in Treasury bills. But now, in 2025, they've dropped to around 15 to 17%. Pretty disappointing, right? But here's the part nobody's talking about. The Ghana Cedi is actually getting stronger against the dollar. And that changes everything. See, when the Cedi gains value, it means some things, like imports or investment costs, become a little cheaper. So the smart money? It's already moving into other opportunities that still give strong returns without crazy risk. So where are those opportunities? Where are the smart Ghanaian investors putting their money in 2025? In this video, I'll walk you through 5 powerful investment options, ranked from highest return to lowest risk. And trust me, you can start most of them even if you're on a tight budget. We'll break it down together. What to invest in, how much you need, what the risks are, and how the stronger Cedi affects your choices. And if you stick with me till the end, I'll share one bonus strategy that could quietly 2 times your returns over time. If this sounds like your kind of content, make sure to like and subscribe. You're watching The Willpower Investing, and together we're building real financial power, one smart move at a time. Let's get into it. 1. Agribusiness. Topping our list is agribusiness. Ghana's food demand never stops, and now that the Cedi is stronger, your farm inputs, like feed, fertilizer, or tools, are slightly cheaper if they're imported. That means your profit margin can go up. Here's what works in 2025. Poultry farming. 25% to 30% return. In 6 to 12 months, pineapple or chili farming. 30% or more returns in 12 to 18 months. Snail or mushroom farming. Lower risk, still great margins. Startup cost. From 1,000 Ghana cedis to 5,000 Ghana cedis, depending on scale. Not ready to farm yourself? Use crowd farming platforms like Grow4Me Trotro Tractor. Complete Farmer. They do the work. You get the returns. Just be sure to review their performance history. Risk level. Moderate to high. Due to weather, market access, or disease risk. But manageable with expert support or tech platforms. Second, stock market. Wait, stock market? Isn't that too risky? Not if you know what you're doing. Now don't sleep on the Ghana Stock Exchange. It returned 28% in 2024, and 2025 is still strong, especially with banks recovering and MTN Ghana posting solid profits. Why it's powerful in 2025? A stronger Cedi equals better import conditions for listed companies. Many Ghanaian stocks pay dividends in Cedis, so you gain even as the currency gets stronger. Stocks are still undervalued versus inflation. How to start? Use IC Wealth or DataBank, stockbrokers. Minimum 200 Ghana cedis to 500 Ghana cedis. Buy dividend-paying stocks. Example, MTN, GCB, CAL Bank. Hold 1 to 3 years for both price growth and dividends. Risk level, moderate. Stock prices fluctuate, but picking strong companies and holding long-term reduces the risk. 3. Mutual funds. Do you like the idea of investing, but hate the stress of choosing stocks or reading the news every day? Then you'll love mutual funds. These are professionally managed funds that pool money from people like you and invest it in a mix of assets, like stocks, bonds, T-bills, etc. In Ghana, funds like DataBank EPAC or M Fund have been giving returns between 16% and 30% annually. Top performers in Ghana: DataBank M Fund, conservative, mostly T-bills. EPAC, aggressive, more stocks. Republic Edifund, balanced. Why mutual funds are great now? With a stronger Cedi, fund managers get better deals on foreign inputs. Diversification spreads out your risk. You can invest weekly, monthly via Momo or standing order. Start with as little as 100 Ghana cedis. Risk level, low to moderate, depending on the fund type. 4. Fixed deposits. Fixed deposits are perfect if you want guaranteed returns with almost no risk. In 2025, smaller banks and credit unions are offering 17% to 24% annual interest. Where to look? Fidelity Bank CBG, Consolidated Bank Ghana. Rural and community banks. Minimum investment, 500 Ghana cedis to 1,000 Ghana cedis. Terms, 3 to 12 months. Tip, ask about after-tax rates, early withdrawal penalties, and mobile app access. Impact of a stronger Cedi? It means lower inflation. So your real returns actually improve, even if rates have dropped slightly. But always ask, what's the interest rate after taxes? And can I withdraw early if I need to? Risk level, very low. Capital is protected. 5. Gold savings and coins. Gold remains a solid hedge, especially in uncertain times. Ghana now mints its own gold coins, backed by real gold and issued by trusted institutions. But now that the cedi has strengthened, gold price movements might slow a bit locally. Still, it holds value over time. It protects you in case the cedi weakens again. Physical gold or gold-backed savings equals financial security. How to start? Buy from certified sellers, e.g. PMMC, IBAN Capital. Start from 11,000 Ghana cedis for a coin, or open a gold-linked savings account. Risk level, very low, but slower returns unless the cedi weakens again. Here's the golden rule. Don't put all your eggs in one basket. Spread your money across 2 to 3 of these options. For example, fixed deposit for safety mutual fund, or stock for growth agribusiness for higher returns, and keep gold as your long-term store of value. This way, no matter how the economy turns, you've got yourself covered. Which investment are you going to try first? Tell me in the comments. And if you want a full video breakdown on how to start any of them, just comment, "Show me how." Like, share, and subscribe for more real Ghanaian financial wisdom. And remember, it's not about how much you earn, but how wisely you invest. Let's build wealth together in 2025.